Manhattan U.S. Attorney Preet Bharara holding a news conference on the insider trading charges filed against prominent hedge fund SAC Capital. Take a listen.
Hedge fund, and which employed the many people responsible for what can only be described as rampant insider trading within those funds. Second, we have filed civil money laundering charges against numerous SAC funds, seeking appropriate forfeiture of assets to address SAC's liability. And third, we unseal today the guilty plea of yet another portfolio manager at SAC, Richard Lee, who just this past Tuesday pled guilty to committing insider trading offenses while an employee at SAC. Mr. Lee brings to 8 the number of employees so far convicted of or charged with insider trading for the benefit of SAC. What today's indictment against SAC makes clear is this: when so many people from a single hedge fund have engaged in insider trading, it is not a coincidence. It is instead the predictable product of substantial and pervasive institutional failure. As alleged, SAC trafficked in inside information on a scale without any known precedent in the history of hedge funds. As described in the indictment, the scope of illegal trading was deep and it was wide. It spanned more than a decade in time, involved the securities of at least 20 public companies, extended across multiple sectors of the economy, and benefited SAC to the tune of at least hundreds of millions of dollars. Today's indictment, though, is not just a narrative of names and numbers. It is more broadly an account of a firm with zero tolerance for low returns, but seemingly tremendous tolerance for questionable conduct. And so SAC became, over time, a veritable magnet for market cheaters. The SAC companies operated a compliance system that appeared to talk the talk, but almost never walk the walk. And that is why today the institution itself, rather than just individuals, stands charged with wire and securities fraud. Now, before I review some of the charges in detail, let me introduce our partners in this investigation and prosecution. I am joined by our partner in this and so many other cases, the FBI, led by George Venizelos, the Assistant Director in charge of the FBI office here in New York, and April Brooks, the Special Agent in charge of the FBI's Criminal Division. I want to thank George and April and their dedicated team, FBI Special Agents James Hinkle, Matthew Callahan, B.J. Kang, David Makel, Matthew Thorson, and Ronan Byrne, for their incredibly hard work and assistance, not just on this particular case, but on all the cases that led us to this point. I especially want to acknowledge the career prosecutors from my own office. They are Antonia Apps, Arlo Devlin Brown, and John Zach. The AUSA is handling the prosecution, and their chiefs, Mark Berger and Anjan Sani. Also Micah Smith for his work on the forfeiture aspects of the case, as well as Asset Forfeiture Chief Sharon Cohen-Levin. And I also want to acknowledge the exceptionally hard work and supervision done by the Chief of the Criminal Division, Lauren Reisner, and the Deputy U.S. Attorney, Richard Zabel. Now, let me take a minute or two to talk about the particulars of today's charges and guilty plea. First, the guilty plea we announced today is by one of SAC's portfolio managers, Richard Lee, who until very recently co-managed a $1.25 billion portfolio focused on special situations like mergers and acquisitions. While still a portfolio manager at SAC, Lee obtained inside information with respect to various securities, including Yahoo and 3Com Corporation. As set forth in the larger indictment, the particular story of Richard Lee's time at SAC is emblematic of the broader culture problem at the fund. As alleged, the SAC companies hired Richard Lee despite a reputation for insider trading. Indeed, he was hired over objections from SAC's own legal department, despite specific warnings during the application process that Lee had improperly been part of an insider trading group at his prior employer. And so, predictably, from virtually the inception of his employment at SAC in 2009, Richard Lee began to trade on inside information, conduct, as I mentioned, that he pled guilty to 2 days ago, and he is continuing to cooperate with the government's investigation. Second, as I mentioned, this morning we filed a civil forfeiture action in federal court. The forfeiture complaint alleges that the SAC companies engaged in money laundering by commingling the illegal profits from insider trading with other assets, using the profits to promote additional insider trading and transferring the profits. Our action today does not seek to freeze any of SAC's assets, and we are always, in this case and in other cases, mindful to minimize risks to third-party investors. In other words, we have not today restrained any money, and we will discuss with the company a reasonable method going forward to protect all parties' legitimate interests. And finally, as I mentioned, the indictment unsealed today charges the 4 SAC management companies with insider trading. If you look at the very simple chart to my right, you see that the 4 management companies were Cigna Capital Management LLC, SAC Capital Advisors LLC, SAC Capital Advisors LP, and CR Intrinsic Investors LLC. And as I mentioned, the count now is up to 8 individuals who, during their time as either portfolio managers or research analysts while at one of the management companies, have now either been charged or pled guilty. 6 have been convicted, and 2 are still awaiting trial. Most recently, as I mentioned, Richard Lee, who was a portfolio manager at SAC who pled guilty on July 20th, 2013. He's not even the first Richard Lee, because we have one over here, who was pled guilty in connection with ongoing insider trading at SAC. So why are the SAC entities being charged? In addition to individuals, sometimes the organizations that employ them are criminally culpable and merit prosecution too. The SAC companies are being held accountable for the criminal acts of so many of their employees because the misconduct was pervasive, because those employees were acting for the direct financial benefit of the firm, and because the company did not effectively police its own precincts. As alleged in the indictment, the SAC companies went out of their way to find employees with personal networks of company insiders, but did not correspondingly consider whether the employees were using such contacts to obtain inside information, despite red flags. By way of just one example, John Horvath was an analyst in the tech sector for one of the entities charged today. SAC's hiring report on Horvath touted that Horvath generated investment ideas by, quote, mining his industry contact network for data points, close quote. Last September, Mr. Horvath pled guilty to mining illegal inside information from that very network. More generally, the failures of SAC to police itself are legion, as alleged in the indictment. Red flags and warning signs were repeatedly ignored. Until late 2009, the Compliance Department rarely reviewed electronic communications by SAC employees containing suspicious terms and failed to detect the insider trading by any of the 8 SAC employees charged to date. And as alleged in its entire history, SAC identified possible insider trading by any of its employees just once. And on that occasion, SAC not only failed to report the matter to law enforcement or regulators, but those individuals were not even terminated from employment. In fact, so far as we can tell, SAC never reported suspicious trading to any regulator or criminal authority ever. Now, a company reaps what it sows, and as alleged, SAC seated itself with corrupt traders, empowered to engage in criminal acts by a culture that looked the other way despite red flags all around. SAC deliberately encouraged the no-holds-barred pursuit of an edge that literally has carried it over the edge into corporate criminality. Companies, like individuals, need to be held to account and need to be deterred from becoming dens of corruption. And so to all those who run companies and value their enterprises, but pay attention only to the money their employees make and not how they make it, today's indictment